Central Bank of Nigeria, CBN, EFCC probe banks, firms over alleged forex racketeering. Private sector foresees higher inflation, massive job cuts as NPC hikes interest rate in Nigeria. South Africa holds repo rate at 8.25%. Welcome to Business Edge. I am Perpetua Fasanmi-Peter. First, let's bring you our top business headlines from across the continent. Petroleum Company Limited, NNPCL, has refuted allegations of reducing petrol and diesel pump prices. The NNPCL spokesperson, Olufemi Shuneye, dismissed these claims as untrue and urged the public to ignore them. Recent social media posts suggested price cuts below 600 naira for petrol and below 900 naira for diesel. But NNPC Limited clarified that no such adjustments were made, emphasizing its commitment to maintaining petroleum product availability at its retail outlets nationwide. The company emphasized the inaccuracy of the circulating reports. Kenya is set to grant a license to the Uganda National Oil Company, UNOC, resolving a prolonged dispute that strained diplomatic relations and involved legal battles. Kenya's Energy Cabinet Secretary, Davis Churcher, announced ongoing efforts to authorize UNOC to import fuel directly via the Kenya Pipeline Company, KPC. This move aims to leverage Kenya Pipeline Company, KPC's infrastructure without disrupting operations. The recent withdrawal of a court case blocking UNOC's licensing suggests that the permit may be issued soon, potentially ending the conflict and enabling UNOC to procure fuel from retail barring. Uganda's pursuit of this license, initially contested in a regional court, aligns with its strategy to diversify fuel sources and engage in direct imports, impacting local oil marketers while maintaining collaboration with KPC for transportation and storage. 15,000 Ethiopians, predominantly youths, have voluntarily returned funds withdrawn from Ethiopia's largest commercial bank due to a system glitch allowing excess withdrawals. The Commercial Bank of Ethiopia, CBE, has recorded over 80% of the lost funds, amounting to approximately $14 million, contrary to the initial $40 million reported. Withdrawals during the glitch ranged from 9 cents to $5,350 by individuals, exploiting the system error during routine maintenance. While most have returned the money, 567 individuals are yet to do so, prompting the bank to publish their details to encourage repayment. The remaining 20% of unrecovered funds, deemed insignificant to the bank's finances, is still being pursued to uphold integrity. The glitch primarily affected university students, with institutions urging them to return the funds. We'll take a break now. When we come back, we'll bring you a market update. Stay with us. On Wednesday, Nigeria's stock market recorded its first gain this week, despite the recent hike in interest rates. Tuesday's increase in the monetary policy rate, that's the MPR, to 24.75, triggered expectations that investors would flee the stock market in favor of high-yielding fixed income options. However, the market defied expectations and rose 0.32%, or 188 billion naira, by the closing bell. This suggests investors saw value in some stocks, particularly in the banking sector, as they anticipate upcoming corporate actions and dividend announcements. We begin with the all-share index now, saying what the market did yesterday. And so for the all-share index, we have a gain for the all-share index. I guess that will be put up very soon. But of course, the all-share index, we saw a gain by 0.32%. That's for the all-share index. And then it's closed 104,283.64. Now let's go to market capitalization. For market capitalization, we see it close at 59 trillion naira. That's the market capitalization. And now let's take a look at the top gainers from yesterday's market. For the top gainers from yesterday's market, we have Computer Warehouse Group closing 7.15 kobo after getting 10%. Julie getting 9.97%. FTN Cocoa getting 9.94%. We have Consolidated Hallmark PLC getting 9.72% and livestock getting 9.70%. We can also see the closing price yesterday. Now let's move on to the top losers from yesterday's market. Northern Nigeria Flour Mills, that's NNFM, closing 48 naira 30 kobo after losing 9.97%. Prestige losing 9.68%, Omatech losing 8.86%, Veritas Capital losing 8.57%, and then we have May and Baker losing 8.33%. Now let's look at sectoral performance. For sectoral performance, we see that the financial service sector is actually up. For banking sector, we see 3.01% change. And trust me, this is as a result of what happened in the banking sector yesterday. We saw the Fugas without the F. I mean, the Fugas without the F, that's the Fugas without the F, without FBN Holdings. So you talk about UBA, you talk about GTCO, you talk about Access Bank or Zenith. They all closed, you know, they had amazing numbers yesterday. They were the top traded stocks yesterday in terms of volume, and GTCO was the top traded in terms of value, while Access was the top traded in terms of volume. So you see volume, value, all of that contributed to what we are saying here, like I said, except FBN. Okay, so for insurance, we see a 0.12% gain. For oil and gas, flat. And then for consumer goods, minus 0.11%. For industrial goods, we have 0.07% up. But that's the market for yesterday. And of course, tomorrow we'll bring you whatever the market closes with today. We'll take a break now. When we come back, we'll start our first conversation for today. You're watching Business Edge. Glad to know you're still with us. Alleged forex racketeering, CBN, EFCC begin probe. Obasanjo blames unemployment for rising banditry kidnapping in Nigeria. Private sector foresees higher inflation, massive job cuts as NNPC hikes interest rate. Well, joining me to unpack this is Mokhtar Mohammed, the CEO for Asher Investments. Thank you, Mokhtar, for joining me today.
Thank you for having me. Good morning.
All right. Well, let's begin with the story about EFCC going after, forex racketeering, people who are involved in that. Now, the CBN governor actually insisted that several forex requests are fraudulent, made with invalid, illegal documents. And to this end, security agencies, including the EFCC, are currently investigating questionable foreign exchange allocations and even forward contracts previously estimated at 2.4 billion naira. For a fair outcome, I want to say, who are the likely parties for investigation, apart from the companies or individuals that made the fraudulent request? I mean, I want to believe it went through a process. So who are the people, we need to probably question, or the organizations or institutions that we need to question so we can ascertain what actually went wrong?
Well, Perpetua, you most ordinarily you should question the bank. But you need to know that some of these transactions were directly done between individuals and the CBN, not directly coming in from the bank. Some of these transactions come as a result of direct intervention by CBN into some key Nigerian economy space. So you can't directly say the bank was culpable, or depending on the transaction. I've not seen those transactions yet. They've not given us details of what those transactions are. But basically, some of those transactions are transactions that may have been done through the bank. Definitely, if you want to transfer money, you have to transfer it through the bank. But again, have to come from instruction from the CBN, depending on what arrangement the CBN have with any individual. The bank cannot be questioning those arrangements. It's not meant for the bank to do due diligence. If I say I and the CBN have discussed, CBN is supposed to give me so. All they do is that onward transfer, you transfer your document to the CBN. CBN must have verified that. It's in terms of payment that those payments will also have to come through the bank. And if the CBN have other payment, who is the bank to say, oh, we will not pay this money? So that's my take on it.
But I like what you said, talking about how that we do not have the details yet, and so we cannot totally, say this or that is what it is. But I like what you talked about, saying what prevailed during the past administration, where we were having some of those direct, transactions and all of that. Good one. Now, looking at the allegations again, we talked about, they talked about lack of valid documentation, including the allocation of millions. I mean, I watched Cardoso say that millions of dollars were probably given to fictitious entities, and also the provision of forex allocations without the corresponding naira value, among other infractions and discrepancies. These are economic crimes. What are the wider implications of perpetuating these acts if the plug had not been pulled?
Well, the one economic implication was that would have been paying 2-point-something billion for services not rendered. And that is exactly what normally happened during the time of subsidy payment. If you remember the subsidy scam during the time of President Goodluck Ebele Jonathan, where the current chairman of Access Holding, Ike Mokwede, was the leader of those forensic audit, and we realized that a lot of marketers were collecting money without even delivering anything to the Nigerian government. And you remember a lot of marketers were asked to refund some of this money. So we're happy that Cardoso is doing the same thing. But again, this is just a failure of institutions. So it's not supposed to be like that, whereby somebody could just be able to defraud us of our own from the foreign reserve directly. And where you could see that happening, and if you look at some of the documents before the court, in the case between the CBN and the former governor of CBN, the government of Nigeria, the former governor of the CBN, Godwin Emefiele, where they say about $6.2 million were given to individuals as money that should be paid to election observers, where signatures of the former president and the SSG were all forged. So that tells you a lot of things that have been going on in that space. And that's why we keep saying that the CBN does not have the power to monitor a lot of these things, to know if somebody is bringing in a fake document or not, because that is not their job. The job for such things were left for the commercial bank. But at that time, the CBN was doing direct interventions in some of these products, and they didn't get the commercial bank involved, even in recovering of this money. So I totally agree with what Cardoso has said, and we have to salute his courage for insisting that this money will not be paid. Due diligence must be followed. He even still said it, if the security agents and the companies involved are able to prove that you really render any services, the CBN will have no other reason than to pay you this money. But for now, based on what they've gotten with your documentation, they don't think they are qualified. And I think it's good. But the larger international committee, it could also be a game changer. People will now see that, okay, it's not good to do business in Nigeria because you have a thorough due processes, whereby if you have your documentation, your money will be paid to you.
All right, well, at the risk of sounding like the devil's advocate, is there a possibility that some of these questionable requests were probably made without any intended wrongdoing, either on the part of the businesses or even the processing banks? I ask because when the Bank of Ghana suspended 2 Nigerian banks that were operating in Ghana from participating in the forex market, one of them, GTB Bank, GTB Ghana, specifically said no wrongdoing was intended. So critically speaking, is that possible?
Well, if you look at the GTB case, they say no wrongdoing was intended because they say they were doing a transaction based on the request of a customer. So that's a different thing. So it's a three-way system. There is a customer, there is GTB, and there is the Central Bank of Ghana. But in this case now, what we see that there will be a person, a customer, the GTB is, using an example of GTB is just an intermediary, and then the CBN of Nigeria is the one that is ordering some of these payments. So I don't think it's same of same. And again, if you're saying, is it possible for such things to happen? Like I said, it all depends on who is handling it from each end, whether due diligence were looked into or it was just something that they really knew that this document was not correct. But again, because of the motive behind it, either for corrupt enrichment of every party involved in the transaction, they decide to look the other way.
All right, let's move away from this conversation. Let's get to the second one, where we had the former president of Nigeria talking about how that insecurity and banditry can actually be blamed on unemployment. He said a lot of things, but I'd like you to, start by saying what stood out for you from all the things he said.
Well, President Obasanjo is a man that you cannot just but turn your face when he says some things, because he has been a 2 times president, both as a military president and as a civilian president. So he seems to be a man that knows onions. Now let's look at what he is trying to say. Of course, it's not new that banditry has fueled a lot of insecurity in the north, because they found the willing vessels in unemployed youth, and so they engaged them. Remember, before now, even when the security agency were being interviewed, some of these willing youth were paid money, whereby they would earn salary. They were given a lot of money to be part of it, and they also had food and everything. So definitely, it's part of what I totally agree with him, that the major problem of banditry, especially in the north, has to do with willing vessels because of unemployment. They don't have anything they are doing. And some of them also fell into this because of intimidation from the terrorist group, because you can't go to farm, a lot of things will happen. So you won't blame them. If you know that you are saying, oh, it's good for what they are doing, but when the means of livelihood was taken away from them and the security could not protect them to go to their farms, could not handle these things, then they decide to join them. They say, if you can't beat them, join them. For me, I think he was spot on that. And I think the government need to look into it.
All right, now talking about agriculture generally, CADA Harmonies' latest projection for 2024 indicates that Nigeria is expected to see about 26.5 million people grappling with high levels of food insecurity. Now, that's a sharp rise from the 18.6 million people currently vulnerable to food insecurity. That's looking at data from October to December 2023. Now, what are the factors fueling this, and how can this trend be reversed?
Well, the factor of present is, we just talked about it just now, insecurity. A lot of farmers cannot go to their farm again. And then secondly, we look at the high cost of production. Even when they have to go, the cost of transportation, a lot of farmers are out of businesses. And but basically, infrastructure also has a role to play, because, like I said, the cost of movement of goods and services, and the lack of support from government, especially in key agricultural states in Nigeria. So government need to see how they can intervene directly. Now, providing solution and intervene directly into some of these states that have a key driver. I don't see why government should not intervene in rice production in KB State to see how they can improve production. I don't see any reason why government should not intervene in Kano State in terms of the area of tomatoes production. So definitely what is driving this high level of food insecurity has to do with insecurity, where a lot of people cannot go to the farm. Then again, like I said, also we have the challenge that has to do with cost of production, which has gone high. But I think government can deal with that if they begin to look at intervening. I'm not talking about the CBN, I'm talking about the physical side intervening. You can see that CBN also have decided to intervene. That's the challenge we have. Even if they say they don't want to intervene directly, but this one is a different type of intervention. It's a production of fertilizers to farmer.
Well, let me come in there. Let me come in there. Talking about the fertilizer, he tried to explain, saying it's something that had been on the ground before and they wouldn't leave it to waste. So the only thing they could do was to give them out. So it's not like they are actually directly participating. It's just that there was something on ground that needed to push them out. You can go ahead.
Well, if it's on ground, then that means it was already paid for. So they just needed to deliver it. So that is fine. But not that they were the one that released funds to do it again, because they've said that they won't be doing that. So that's a good, thank you for giving me that clarity on that side. But like I said, I think the basic driver of some of this, what we are seeing in terms of food insecurity is also insecurity, especially in the northeast, north central, even in the southeast. And now we are beginning to see the south coming in their play because of what have just happened recently. So government need to do a lot, provide security for them, and begin to see how they can support farmers to make cost of funding a little bit cheaper for them. Before now, we used to have agricultural cooperative banks, whereby farmers will form a cooperative union where they can access funds, and these funds are monitored, given to these farmers. And once this harvest season is finished, these farmers decide to pay this money back. So we need to begin to look at source synergy to move this sector forward.
All right, well, let's move on to, beg your pardon, let's move on to the hike in interest rate. I'd like to get your thoughts on the hike, and then if you share the same sentiment with the organized private sector. They are saying that this would probably cause some persons to lose their jobs.
Well, in person losing their job, I think I agree with them, because some people will have to lose their job either in right sizing or just rightly reducing the size of your, because again, what the rate have said, that means the cost of funding has gone high. Some of these companies are already borrowing. They borrowed at 22%. Now they will be paying at 26 or 27%. So once you have a challenge in your business, the first thing that you have to look at your costs. And when you're looking at costs, you're looking at cost in terms of where do you think I can do. You have 2 staff. Can you now deal with 1 staff instead of having 2 staff? You look at reducing costs, and some of these companies might just think one of the ways they can survive is to reduce costs in the area of personnel. That also is negative in the short term. I said in the short term. Now, when you look at the hike in interest rate, was I expecting it? I wasn't expecting it. But again, when you look at the reason behind it, you may not just but agree, because the first CBN Monetary Policy Committee meeting that the current CBN governor had, he told us that inflationary pressure, price volatility are driven by FX rate volatility. And so they looked at it, about 50% of the inflationary pressure we have is driven by FX. So they looked at it and said, you know what, there are 2 monsters to be addressed. And if you can address 50% fit now, which has to do with inflation, the first thing you need to do, you have to stabilize the FX market. So in stabilizing the FX market, the CBN did 2 things. They make sure that they now make sure that BDCs will have $10,000, even if before they were promised $20,000, and then also increase the yield in terms of, because when you increase the rate, that means you have increased yield in the fixed income space to be able to attract foreign investors. And the key issue here is that once you attract foreign investors, they are coming in with funds, and those funds are in form of FX that could help boost your reserve and stabilize the currency, because the CBN will be able to intervene in this space. So this talk about, oh, you must not intervene, but you try to intervene when you think that your currency is priced beyond its value. So ordinarily, if there was liquidity, the CBN, through the CBN and also the National Assembly, have said that the right price of the naira was between 800. If there were liquidity, immediately it moved beyond the 800 naira mark, the CBN would have been intervening. So I think for the short term, there will be job losses, but in the long term, lots of production will come down. A lot of businesses will continue to work. So for me, I think I agree with the organized sector, but it is what they ought to do, because currently, what can help us drive down inflation is to create stability in the exchange rate, so that we can begin to end these effects through the 4 major channels. 3 major channels first. The first one is the first one is foreign direct investors, portfolio investors, and Nigeria and the diaspora. And when you look at the 4th one, which is the sale of crude oil, realize that we are beginning to have a little bit of stability there. Until recently, even the current ambush of the army has nothing to do with the crude oil, at least at this moment. That's as a communal clash between 2 communities. So definitely that means we are achieving a little bit of stability. Our oil price has gone up. Our oil output has gone up. So I think they needed to do that. I think I'm in support of that.
All right, so let me come in here. You've said that they needed to do that, but then we have people who have been saying that these rate hikes have gone on for a while and we haven't seen any change so far. What do you have to say about that? I mean, last month we had a 400 basis points and now we're talking about another 200 basis points. But of course, we knew the hawkish trend started sometime 2022, May 2022, and that continued up until July when they had the last NPC, before then another one in February. And some persons have said throughout, from 2022 May till July 2023 till, maybe February when the NPC picked up, we haven't really seen any change. We've not seen inflation drop except once. That was December 2022 when inflation dropped, and then the next month it came back up. That was January 2023. So what do you have to say about that?
Yes, Perpetua, you look, what happened was the previous CBN management seems to be doing something different, say something different, behind the scene do something different. What I really fueled inflation to where it is now was the excess liquidity we had in the system, especially through the printing of printing of currency because of means and ways. the ways and the means whereby they were printing currency for the federal government, and this money were not put in the productive side of the economy. So what they do in one hand, because they now increase liquidity in the other hand, we're not seeing the effect in terms of inflationary pressure going down. And remember, at that time, I personally said that we were doing copy and paste without looking at our own peculiarity of our own environment. And I remember saying at that time, and I'm still saying it, and which the current CBN governor confirmed, that the major key driver of our inflationary pressure still remain the foreign exchange volatility. Because at the time you were talking, foreign exchange has moved from 360 to about 600, 700 at that time. The CBN was not even addressing that space. They kept saying that it's speculators, it's market saboteur. They were not really doing anything about it. Now, you can't compare that with now, because now they came in, they've seen the problem. Their first NPC meeting, the exchange rate was going to almost 2,000. They have been able, in their second NPC meeting, the exchange rate was 1,400. Even as we are talking now, it's still going down to about 1,300, 1,382, depending on demand. So that shows that they have looked at what the really issues are, and they are trying to address it. So it's, yes, initially it seems to be like we are just copying and pasting, copying and pasting. Now, the other tool they are using is also mopping out excess liquidity in the system. So,
just before we go, talking about Mukhtar, just before we go, I like what you said now, mopping up excess liquidity. And we saw what that did to commercial banks, borrowing 24 trillion naira within 3 months. Is that even a good sign? Can we continue doing that? And for how long?
Well, if you look at the commercial banks that are borrowing that, you realize is that it's not the tier 1 banks, the major big ticketing banks in Nigeria. We saw that happening, especially for the tier 2 bank and tier 3 bank. Well, I won't say that's no problem. But again, you see, it's a short-term measures, because what we are saying is that the mopping up of this excess liquidity just has to do with the liquidity ratio increase to 45% from 30%. And this, and recently we have seen that again also happen. Currently, the CBN did not increase it in the commercial bank; they left it at 45%. Yes, and then they also decided to look at that from the merchant bank and increase their own by 5%, making it 15%. So liquidity itself, it's a big challenge, because we have, don't forget, the 10 trillion that I'm talking about that have been put into the system through the ways and the means. So they need to find a way to mop it out, because what happened, Perpetua, the volatility you've seen in the exchange rate, because these 10 trillion were not put in the productive sector, were put into hands of people that were using it as a tool for corruption. What they did was to take that same money that was supposed to be put in the ways of the ways and the means and ways and means, which the CBN will soon be investigating. I mean, the Senate will be investigating, and we'll see a lot of maybe we'll begin to get a lot of exposure on what really happened.
All right.
So those money were the money that were pursuing the dollar. And so what will happen? We had a lot of naira pursuing the fuel dollar, and we saw the exchange rate galloping to the way it was today.
All right, thank you so much, Mukhtar Mohammed. We just have to wrap it up right here. I mean, there's a lot to say when it comes to macroeconomy and all of those things, but we just have to wrap it up here. Thank you so much for your time on the show today.
My pleasure.
We'll take a break now. When we come back, we'll bring you international business headlines. Stay with us. You're watching Business Edge. Britain's economy slipped into a mild recession last year, challenging Prime Minister Rishi Sunak to reassure voters before an anticipated election. Official data revealed GDP contracted by 0.1% in third quarter and 0.3% in the fourth quarter, prompting opposition criticism of Rishi's recession. Despite a slight uptick in January and positive signals for February and March, recovery from the pandemic remains sluggish. As of now, the economy stands only 1% larger than its late 2019 level, with Germany being the sole G7 nation with a worse performance. Sunak faces the task of restoring confidence amidst ongoing economic uncertainty. At the Bank of Japan's March meeting, a summary of opinions revealed cautious sentiments among policymakers regarding the phasing out of ultra-loose monetary policy, while some board members felt the economy didn't warrant rapid interest rate hikes. others were divided on whether it was robust enough to withstand the transition away from negative interest rates. The recent decision to end 8 years of negative rates marks a significant departure from the Bank of Japan's long-standing policy of stimulating growth through massive monetary intervention. This cautious sentiment suggests a preference for gradual adjustments in interest rates, potentially keeping the Japanese yen under pressure as investors monitor the interest rate differentials between the US and Japan. And finally, oil prices rebounded on Thursday after 2 days of declines as investors reevaluated recent data on US crude oil and petrol inventories, prompting a return to buying activity. Brent crude futures for May rose by 0.4% to $86.40 per barrel, with the June contract also increasing by 0.4% to $85.73. Meanwhile, U.S. West Texas Intermediate crude futures for May delivery climbed by 0.5% to $81.74 per barrel. Both benchmarks were poised to mark a third consecutive month of gains, up approximately 4.5% from the previous month. We'll take a break, and when we come back, we'll bring you South Africa. Yes, we'll be talking about South Africa. Stay with us, don't go away. South Africa's central bank kept its main interest rate unchanged on Wednesday, saying its policy stance still needs to be restrictive to address elevated inflation expectations. This comes even as inflation rose to 5.6% year-on-year in February from 5.3% in January, nearing the top of the central bank's preferred range. In a statement accompanying its decision, the bank said that headline inflation was now expected to reach the midpoint of its target range, 4.5% only at the end of 2025, later than previously forecast. Joining me for more on this is Professor Waldo Krugel, an economist at the Northwest University. Thank you, Prof, for joining me today.
Good morning. Thanks for the opportunity.
All right, so the repo rate is held at 8.25%, much to the expectation of analysts. Was this also what you expected?
Yes, I think everybody was in consensus that it's not really possible to cut the rate at the moment, particularly with the two latest inflation data points showing an increase. The Reserve Bank is not convinced that inflation is trending downwards in the way that they would like it to see towards that midpoint of the target band. It leaves them little choice, and at least they decided to maintain the rate unchanged.
Well, this is the SARB's, fifth consecutive hold on the repo rate. And this particular one comes after inflation hit a 4-month high last month. Don't you think that might be an indication that the Apex Bank may need to, tighten the rate to further rein in inflation?
For the sake of our consumers, I hope not. But there are worrying indications of more pressure on prices. The moment that the rand-dollar exchange rate weakens, that's detrimental to the cost of imported goods. And in addition to that, we are also struggling with an El Nino-induced drought, and crop estimates are down significantly from last year, which could put pressure on food prices again. So with those two dynamics, it's clear why the bank expects a very slow decline back to that midpoint over the course of this year and next year. It seems that inflation is likely to stay a bit higher for longer.
Well, apart from the monetary tools that, the bank has been using, you've talked about some of the things that do not sound like, factors that fall within the purview of the monetary authority. So what is the fiscal authority? What is the government doing to address some of those things? I know some of them are probably, they are not human in nature. You can't probably control some of these things, and some of these risks are also probably global, not domestic. So, but what is being done to ensure that these risks are also, taken care of?
I think that the broader effort is to have policy stability, particularly on the fiscal side. And the Minister of Finance has been following a process of fiscal consolidation, trying to cut back on the interest on the debt and the debt itself, and in that way providing a more stable platform for the exchange rate. There's also some relief for consumers, those that get the 350 Rand grant. That's been increased to 370 rands now. It's not a lot, but it helps a little bit to just ameliorate those effects of high inflation rates. I think the key thing is, though, is that a portion of that high inflation rate has to do with administered prices, the price of electricity, water, local municipal rates, etc. They've been increasing at rates above the target for a while now, and they are difficult to get lower, mainly because those authorities need the money to keep providing services. And I think that puts a floor under the inflation rate and undermines the Reserve Bank's ability to really decrease that rate back to 4.5%.
All right, well, so talking about, holding or hiking a rate, I mean, there are multiple expectations for when South Africans should start expecting rate cut. Some analysts believe, February figures have further pushed the likely period forward. What are your own thoughts on when citizens should expect a rate cut in South Africa?
From a practical point of view, the next NPC meeting is the day after the elections in May. So it's unlikely that we'll see a change then. The meeting after that is mid-July. So that's really the first opportunity to cut rates. And that is going to depend on the data that becomes available in the meantime. And the bank will have to see a significant slowdown in inflation to be able to reduce rates then. I think that's why analysts are expecting even later in the year and a smaller number of decreases as well. So it's come down to maybe 2 to 3 25 basis points reductions before November, which leaves it quite late as relief for consumers. In addition, I should say, it's unlikely that the Reserve Bank here will move before the US Fed does. So in that sense, our intricate links via the exchange rate are such that we would have to wait for them to start cutting rates before we do.
All right, so talking about inflation really in South Africa, it hit 5.6% in February from 5.3% in January. Do you see this as a one-off, or do you have fears that inflation might continue to trend upward in the coming months?
There are elements that are once-off. For example, medical insurance costs are only accounted for once a year in the inflation figures, and they got added in the January numbers. And those increases were also quite above the target band, higher than 6%. So that contributes. And we know that there were also fuel price increases in both January and February that would have an impact on that rate. The fuel price increases, though, are linked to oil price and the rand-dollar exchange rate, and those could be recurring. At least what we're seeing for April is a small increase, but going forward, those are two big unknowns that's going to influence the inflation rate locally.
All right, so what are your suggestions really for addressing inflation in South Africa, for tipping it down? What are your suggestions, whether it's a monetary policy tool or even, a fiscal tool or whatever it is really, so we can address it? I know you've mentioned some of the things that are responsible for this, but yeah, it's good to see the causes, but we also need to know how to, work on this thing so we can have the effect.
I think the Reserve Bank's role is the slow grind of keeping rates higher for longer and keeping consumer spending lower, to in that way slowly just get the inflation out of the system. But it's a painful way of doing it. A bigger jump can be twofold. One would be to make policies and reforms following the election that would give a confidence boost to the rand, get investors back into our bond market, and in that way solve these problems of a very volatile exchange rate. If we can get a slightly stronger and stable exchange rate, that would do a lot for the inflation outlook. On the other side, a lot of those reforms have to do with the fiscal side, with institutions like Eskom and the local governments. And if they were able to keep their price increases in years to come within the target range, again, that would make a major difference to the Reserve Bank's efforts. But that requires really large-scale reforms that are complicated and time-consuming.
Well, a hold on repo rate also means banks will maintain their prime lending rate. I mean, it goes together. How are businesses and investors taking this decision? Because here in Nigeria, the private sector isn't taking it sitting down or smiling. So how are businesses and individuals, responding or reacting to this, knowing that the repo rate is much higher than even the inflation rate we're talking about in South Africa?
They're taking it hard. There's a fair bit of news in the business media, but you can see the impact of this on business confidence, on consumer confidence. It's in the purchasing managers' indices. Everybody's quite downbeat about the prospects for the economy until interest rates start coming down. And in a way, this negative sentiment further reduces investment that is desperately needed to get the economy growing at a faster rate than we are at the moment. And I think even the banks who tend to do well when interest rates are high are reporting more bad debts, people who can't repay their loans, and they are slowly coming under pressure. So there's no doubt that this high repo rate is having a huge impact on the demand side of the economy.
That's not a very good one. I mean, talking about default on loans, it's not a very good one. But then the South African Reserve Bank actually said in a statement accompanying its decision that headline inflation was not expected to reach the midpoint of its target range, that's 4.5%, only at the end of 2025, later than its previously, forecast. Do you share the same sentiment?
Unfortunately, yes. I think the factors that are keeping inflation high are exactly the sorts of things that the bank has little control over, and the interest rate tool that they're using to dampen economic activity in order to get that price pressure out of the economy is a rather blunt one, and it's a slow grind to get to that much lower level of inflation. Convincing people to reduce their inflation expectations while when they go to the shops they still see prices increasing is really difficult, and I think it's an uphill battle to get back to that midpoint.
All right, thank you so much, Professor Krugell, for sharing your thoughts with us today on Business Edge.
You're welcome. Thank you.
All right, that's it on this edition of Business Edge. Many thanks for watching. You can follow us on social media. We are at News Central TV. You can also head on to our website, www.newscentral.africa. You can download our mobile app on Play Store and on App Store. Thank you for watching. Till next time, I am Perpetua Fasanmi-Peter. Bye for now.